China just launched what could be the most devastating economic attack in modern history, blocking key semiconductor technology access and wiping out $500 billion in US market value overnight. You're looking at a tech earthquake that's reshaping the global power structure as we speak. In this video, I'll break down exactly how TSMC and ASML became weapons in this economic war, what Trump's furious response means for your investments, and why this isn't just about money, it's about who controls the technology powering everything in your life. The semiconductor chess game has reached checkmate, and the consequences are just beginning. When global powers clash, Canada stands at the crossroads. Canada Connect is your strategic map, decoding the international tensions that rewrite our world. We couldn't do this without our incredible community. Your support means everything. Here's what we've discovered. The numbers are staggering, folks. $500 billion, that's $500 billion, wiped clean from US markets in what financial analysts are now calling the tech bloodbath of 2025. We've seen market corrections before, but nothing quite like this targeted decimation of America's technology sector. It all began at 9:30 a.m. Eastern Time last Thursday when markets opened to news that had leaked overnight from Beijing. Chinese officials had announced what initially seemed like mundane regulatory changes, but as trading floors across New York and San Francisco processed the details, panic spread like wildfire. By 10:15 a.m., the Nasdaq had plunged 7%, triggering circuit breakers that temporarily halted trading. When markets reopened, the selling intensified. The hardest hit? Nvidia saw its stock plummet 23% in a single day, erasing over $200 billion in market value alone. AMD dropped 19%, while Intel, despite its domestic manufacturing presence, still fell 14%. The carnage wasn't limited to chip makers either. Apple, which relies heavily on TSMC for its custom silicon, watched $85 billion in market cap evaporate. Google parent Alphabet shed 11%, and even Amazon, with its massive AWS cloud division dependent on advanced semiconductors, tumbled 9%. What makes this crash fundamentally different from typical market corrections is its selective nature. While the broader S&P 500 dropped a concerning 4.8%, the Philadelphia Semiconductor Index collapsed by a catastrophic 17.3%, the worst single-day performance in its history. This wasn't collateral damage, it was precision targeting of America's technological crown jewels. The timing of China's announcement reveals the calculated nature of this economic strike. Beijing made its move during the Chinese New Year holiday when domestic markets were closed, protecting Chinese investors while maximizing chaos in Western trading. Moreover, they struck just days before major earnings announcements from tech giants, creating a perfect storm of uncertainty that amplified selling pressure. This wasn't about economics, it was about inflicting maximum market pain, explained Howard Klein, chief market strategist at Barrington Capital. The surgical precision targeting companies, dependent on TSMC and ASML technology, suggests months of planning to identify vulnerability points in the US tech ecosystem. The ripple effects extend far beyond the obvious chip manufacturers. Consider the AI startup sector, where companies like Anthropic and Cohere saw private valuation markdowns exceeding 30% overnight. Venture capital funding for semiconductor-adjacent technologies froze instantly. Even traditional businesses with significant AI investments felt the tremors. Ford stock dropped 5% on concerns about its autonomous driving division, while healthcare giant Johnson & Johnson fell 3% over medical AI disruptions. This isn't just about quarterly profits or market fluctuations. What China targeted was the very foundation of modern technological innovation. By restricting access to TSMC and ASML technologies, they effectively placed a stranglehold on the development pipeline for everything from smartphones to supercomputers, from medical imaging to missile guidance systems. Industry insiders point to something even more concerning beneath the surface. The markets are pricing in not just short-term disruption, but a fundamental reshaping of how technology will be developed and manufactured for the next decade, said Jessica Wang, semiconductor analyst at Morgan Stanley. The $500 billion loss today might just be the down payment on a multi-trillion-dollar technological decoupling. So what exactly did China do to trigger this market meltdown? The answer is far more sophisticated than simple import restrictions. Beijing implemented a comprehensive, multi-layered strategy designed to sever critical supply chains at their most vulnerable points. First, they announced new licensing requirements for any Chinese company using TSMC or ASML-dependent technologies, effectively making it impossible for these firms to sell to China's massive market without government approval that would come with strict technology transfer requirements unacceptable to Western governments. Second, Chinese officials revealed they had established a new national semiconductor security bureau with extraordinary powers to block technology flows deemed contrary to national security, using language deliberately mirroring American export control justifications. Third, and perhaps most alarmingly, China applied unprecedented diplomatic pressure on both Taiwan and the Netherlands, threatening economic consequences if they didn't restrict certain technology exports to the United States. This remarkable reversal, China demanding other countries impose export controls against America, caught even seasoned trade officials off guard. Finally, Beijing activated long-dormant provisions in its anti-foreign sanctions law, creating legal mechanisms for Chinese entities to sue foreign companies that comply with US semiconductor export controls, effectively forcing companies to choose between violating American or Chinese regulations. What we're witnessing isn't just a trade dispute. It's the most sophisticated economic warfare operation in modern history, explained former Commerce Department official Thomas Friedberg. China identified precisely where America's technological advantage is most vulnerable and struck with surgical precision. Quick pause. Over 80% of you watching right now aren't subscribed. And if you're finding this breakdown helpful, hitting that subscribe button is completely free and helps us keep cutting through the noise to bring you the bigger picture. And don't go anywhere. Coming up, we'll expose how two companies you've probably never heard of, TSMC and ASML, hold the keys to the entire global tech ecosystem, and why China just turned them into geopolitical weapons. You need to hear this. All right, back to it. Behind that surgical precision Friedberg mentioned lies a technological vulnerability most Americans never realized existed. Two obscure companies that hold the keys to our entire technological future. While politicians debate trade deficits and tariffs, China identified the true Achilles heel of American technological dominance, TSMC and ASML. What makes these companies so devastatingly important that blocking access to them could trigger a market collapse of historic proportions? The answer reveals how frighteningly fragile our technological superiority actually is. Taiwan's Semiconductor Manufacturing Company, TSMC, produces over 90% of the world's advanced chips. Think about that for a moment. One company, headquartered on an island just 100 miles from mainland China, manufactures nearly all the cutting-edge processors that power everything from the smartphone in your pocket to the military systems protecting our borders. This isn't just market dominance, it's a monopoly on the future of computing. But what makes TSMC truly irreplaceable isn't just their market share, it's their technological lead. Their manufacturing processes at 3 nanometers, 5 nanometers and 7 nanometers are years ahead of any competitor. For context, each progression to a smaller nanometer allows for more transistors on a chip, creating exponential gains in power and efficiency. When Apple needs the A-series chips for their latest iPhone, they turn to TSMC. When NVIDIA designs their next graphics powerhouse, they're at TSMC's door. AMD's revolutionary processors, also TSMC. The second critical choke point in this technological supply chain is even more specialized. ASML, Advanced Semiconductor Materials Lithography, a Dutch company most people couldn't name if their life depended on it, builds the only machines on Earth capable of manufacturing these advanced chips. Their extreme ultraviolet lithography machines, known as EUV, are technological marvels that defy comprehension. Each EUV machine costs over $150 million, more than most corporate jets, and requires 40 shipping containers just to transport. These aren't just expensive tools, they're the culmination of decades of research and development that no other company has been able to replicate. Without ASML's EUV technology, the most advanced chips simply cannot be manufactured. Full stop. This creates a dangerous dependency that has only now become blindingly obvious to average Americans. The smartphones enhancing our daily lives, the cloud computing powering our businesses, our most sophisticated military equipment, and the artificial intelligence systems transforming entire industries, they all depend on these two companies that most people have never heard of. China recognized this vulnerability years ago and has been desperately trying to gain access to TSMC and ASML technologies, despite increasingly restrictive US-led export controls. The US government has been applying enormous pressure to limit China's access, even forcing the Dutch government to revoke export licenses for certain ASML machines. China's response? If they can't have access, they'll ensure no one else does either. The investigation into TSMC for potential violations related to chips made for China-based SoftGo, chips matching those found in Huawei's high-end AI processor, shows just how seriously the US government takes this technological choke point. The potential penalty could exceed $1 billion, a clear message about the stakes involved. Meanwhile, China hasn't been sitting idle. Their Made in China 2025 initiative explicitly targets semiconductor independence as a national priority. Companies like Semiconductor claim to be developing lithography technology capable of producing chips under 7 nanometers, while SMIC has entered testing stages for 5 nanometer chips. They're even using AI-powered yield optimization and quad patterning techniques in their ambitious push toward 3 nanometer capabilities. But here's the terrifying reality. Despite these efforts, China remains years behind in key semiconductor technologies. This combination of vulnerability and motivation creates the perfect conditions for drastic action, exactly what we're witnessing now. The true power in this technological struggle comes down to one simple fact. Whoever controls access to TSMC and ASML essentially controls the future of computing power. And with no viable alternatives existing for at least 5 to 10 years, the leverage this provides is unprecedented in modern industrial history. When your iPhone slows down after a few years, you buy a new one with a faster chip. When data centers need more processing power, they install new servers with more advanced processors. This constant cycle of improvement depends entirely on continued access to increasingly sophisticated chips that can only be manufactured using ASML machines and TSMC factories. That constant technological advancement we've all taken for granted is precisely what China aims to control, not through brute force, but through meticulous planning. The Chinese government has spent over a decade and invested more than $150 billion preparing for this moment. What looks like a sudden reaction to export controls is actually the most calculated economic counterattack in modern history, and your retirement account is caught in the crossfire. Look at the timeline. China launched its Made in China 2025 initiative back in 2015, well before the current tensions escalated. This wasn't just ambitious government rhetoric. It was a 10-year strategic plan targeting dominance in 10 critical high-tech industries: electric vehicles, next-generation information technology, telecommunications, advanced robotics, artificial intelligence, and most importantly, semiconductors. The goal? Achieve 70% self-sufficiency in these technologies by 2025 and establish a dominant global position by 2049. Chinese leadership recognized early that whoever controls the semiconductor supply chain controls the future. But despite pouring unprecedented resources into development, the reality has been sobering for Beijing. China currently accounts for about 60% of global semiconductor demand, while producing only 13% of the global supply. This massive dependency creates what President Xi considers an existential vulnerability. Think about this gap from Xi's perspective. His personal political legacy hinges on technological self-sufficiency. He's publicly staked his reputation on China's ability to innovate independently from Western technology. When internal government assessments began categorizing semiconductor dependence as a national security crisis, Xi faced both an economic imperative and a political ultimatum: find a solution or risk undermining China's entire strategic position. The catalyst for China's dramatic move wasn't just technological frustration, it was America's escalating pressure campaign. The US has systematically targeted China's tech ambitions by adding 140 Chinese companies to its entity list. effectively cutting them off from essential American technology without special government approval. Many of these were state-supported manufacturers and research institutions central to China's semiconductor aspirations. Beijing watched as the US coordinated with allies to form a technological containment strategy. The Netherlands and Japan joined America in restricting exports of chip manufacturing equipment. Taiwan, home to TSMC, became increasingly aligned with Western security interests. China's leadership saw a closing window of opportunity: continue the status quo and risk permanent technological subordination, or take dramatic action now. China's countermeasures reveal a sophisticated understanding of global supply chain vulnerabilities. They've imposed export bans on materials critical to advanced chip manufacturing: gallium, antimony, and germanium. These restrictions sent immediate shockwaves through global markets, with prices surging overnight and semiconductor firms scrambling to find alternative suppliers. It's a textbook demonstration of economic leverage. Simultaneously, Beijing has accelerated funding for domestic chip development. New policies actively promote the adoption of Chinese-made semiconductors and manufacturing equipment, creating a captive market for domestic producers still perfecting their technologies. Companies throughout China's tech ecosystem now face both carrot and stick: government support if they buy Chinese, regulatory headaches if they don't. This strategy fits a broader pattern of economic coercion China has deployed when feeling threatened. Australia faced punishing trade restrictions after calling for an investigation into COVID-19's origins. South Korea saw tourist numbers plummet and businesses harassed after deploying a US missile defense system. Lithuania watched its exports blocked after allowing Taiwan to open a representative office. The semiconductor blockade follows this established playbook, but at an unprecedented scale. What makes this situation particularly dangerous is how it's accelerating the fragmentation of the global economy. We're witnessing the early stages of what the World Economic Forum has described as the Great Decoupling. Supply chains that took decades to optimize for efficiency are being rapidly reorganized around geopolitical allegiances. Production is shifting to politically aligned countries, creating redundant manufacturing capacity and driving up costs across industries. The implications reach far beyond tech company stock prices. Military planners on both sides view semiconductor supremacy as essential to national defense. Advanced chips power everything from missile guidance systems to cyber warfare capabilities. The Pentagon has war-gamed scenarios where China seizes Taiwan specifically to control TSMC's manufacturing facilities. What was once dismissed as paranoid fantasy now shapes military doctrine. Is this just about semiconductors? Absolutely not. We're witnessing the opening salvo in a fundamental restructuring of the global economic order, a technological Cold War where the battleground isn't ideology but innovation. The conflict encompasses artificial intelligence, quantum computing, biotechnology, and telecommunications. China's gambit represents not just a reaction to American pressure, but a declaration that the era of interconnected global innovation is ending. With the technological Cold War now underway, Donald Trump has emerged as the most vocal critic of China's semiconductor gambit. Beyond mere rhetoric, Trump's response reveals a comprehensive economic counterattack plan that's raising eyebrows across the political spectrum. His reaction wasn't just angry tweets, it was a detailed blueprint for how he would confront Beijing if returned to power, and it's forcing even his staunchest critics to take notice. The biggest economic attack on America in history, Trump declared, in a fiery campaign speech hours after the news broke. His Truth Social platform immediately lit up with a series of posts connecting China's semiconductor blockade to what he called the disastrous weakness of the current administration. But what makes Trump's response particularly significant isn't just the volume of his outrage. It's how it aligns with the economic warfare doctrine he implemented during his presidency. During his time in office, Trump didn't just talk tough on China. He orchestrated a comprehensive strategy targeting their technological advancement. His administration initiated a trade war that went far beyond typical tariff disputes. Trump's team placed numerous Chinese tech companies on the Commerce Department's entity list, effectively cutting them off from American technology. These weren't random acts, but calculated moves in what his advisors called a generational contest with Beijing. Perhaps most revealing is how Trump's past actions foreshadowed the current crisis. His administration declared a national emergency specifically to address the trade deficit with China, framing it as a direct threat to American economic security. That declaration became the legal foundation for imposing tariffs and restrictions that specifically targeted China's technological ambitions, the very ambitions now being exercised through semiconductor restrictions. Trump's current threats make his previous actions look tame by comparison. He's now promising tariffs of 200% or more on Chinese imports, a dramatic escalation from the 25% rates that shocked markets during his presidency. When I returned to the White House, Trump told supporters in Michigan China will face reciprocal blocking of every single company that supports their semiconductor strategy. These aren't empty threats, they're consistent with his established pattern of economic confrontation. What makes Trump's approach distinct is his willingness to use broad economic coercion rather than targeted measures. While the Biden administration has expanded export controls and emphasized diplomatic coordination with allies, Trump advocates for maximum economic pressure across all sectors. This fundamental difference in philosophy reveals two competing visions for confronting China's technological challenge. The current administration has taken a markedly different approach. Rather than threatening wholesale tariffs, Biden officials have focused on building an international coalition to counter China's semiconductor strategy. Commerce Secretary Howard Lutnick announced plans for a dramatic increase in enforcement and fines for those who break the rules, signaling a preference for targeted penalties over comprehensive economic warfare. Behind closed doors, the situation has triggered a flurry of emergency activity across Washington. High-level meetings between national security officials and executives from America's leading tech companies have been occurring daily. One surprising outcome has been the emergence of rare bipartisan consensus. The CHIPS Act, which allocates billions to rebuild domestic semiconductor manufacturing, and expanded export controls have garnered support across the political spectrum. A unity almost unheard of in today's polarized environment. The crucial question remains, does America have effective leverage to counter China's move, or has the damage already been done? The $500 billion market collapse wasn't simply investors panicking over temporary supply disruptions. That massive valuation loss represents something far more profound. The market pricing in a fundamental restructuring of global tech supply chains that experts believe could take a decade and trillions of dollars to resolve. Consider what's actually happening. Investors aren't just concerned about next quarter's earnings, they're recalculating the entire future of technological development. The integrated global innovation network that produced exponential advances in computing power is fracturing along geopolitical lines. Companies now face the prospect of maintaining separate research, development, and manufacturing operations for Chinese and non-Chinese markets, doubling costs while potentially halving revenues. This technological decoupling explains the market's dramatic reaction. When TSMC and ASML became inaccessible, investors weren't just losing current production capacity, they were witnessing the end of an era of integrated global innovation that had fueled decades of technological advancement and profit growth. While investors mourn the loss of the integrated innovation model, a silent reshuffling of global power is already underway. The real winners of this US-China tech war might be neither America nor China. As supply chains fracture along geopolitical fault lines, countries that were technological afterthoughts just 5 years ago are positioning themselves as the new manufacturing hubs in a post-globalization landscape. The technological chessboard has reached what experts call a critical inflection point. Three distinct futures are now emerging from the semiconductor standoff. First, escalation, where both sides continue ramping up restrictions until virtually all technological exchange ceases. Second, negotiation, where economic pain forces both powers back to the table. And third, the most likely scenario, complete technological decoupling, where separate and parallel tech ecosystems develop independently. Each path creates dramatically different winners and losers, with consequences extending far beyond quarterly earnings reports. We're talking about the fundamental restructuring of the global tech landscape, with trillions of dollars and the national security of multiple countries hanging in the balance. The decisions made in the coming months and years will determine technological dominance for decades to come. What's fascinating is watching how countries caught in the middle are navigating this new reality. Japan, South Korea, and European nations face an impossible dilemma. Maintain access to China's massive consumer market or preserve crucial security relationships with the United States. Many are attempting a delicate balancing act, restricting certain technologies while maintaining economic ties in others. The diplomatic gymnastics are extraordinary, with leaders making contradictory statements sometimes within the same press conference. But the true revelation in this technological Cold War, the emerging winners nobody saw coming, India, Vietnam and Mexico. These nations are rapidly positioning themselves as the Switzerland of the tech world. As companies desperately implement China Plus One manufacturing strategies, these countries offer attractive alternatives with established infrastructure, growing technical workforces, and most importantly, relative neutrality in the great power competition. Companies are increasingly adopting China Plus One manufacturing strategies to mitigate risks and reduce reliance on any single country, according to industry analysis I've reviewed. This approach involves establishing secondary manufacturing bases outside China, creating unprecedented opportunities for nations that can fill the gap. Vietnam has already seen electronics manufacturing surge 30% in just 2 years, while India's smartphone production has quadrupled since 2020. The speed of this manufacturing shift is remarkable. 5 years ago, producing advanced electronics outside established hubs seemed impossible. Today, it's not just happening, it's accelerating. Tech executives who once dismissed these alternative locations are now making monthly visits, signing billion-dollar facility agreements and relocating key personnel to these emerging tech hubs. This manufacturing revolution comes with a significant catch for consumers. The ruthlessly efficient global supply chains that made technology increasingly affordable are splintering. When production facilities must be duplicated across multiple countries due to geopolitical concerns, rather than economic efficiency, costs inevitably rise. Your next smartphone will likely cost 15 to 30% more as a direct result of this tech fragmentation. The same goes for laptops, cars, medical devices, essentially anything containing semiconductor components. American policymakers are actively encouraging this shift with a strategy industry insiders call friendshoring, sourcing critical components and materials exclusively from allied nations, with shared values and geopolitical interests. It's a direct response to the vulnerability exposed when China weaponized its position in tech supply chains. The ultimate question hanging over this technological divorce is who emerges stronger, China or America? The answer might disappoint partisans on both sides. Neither country wins outright in any realistic scenario. China may eventually achieve greater technological sovereignty, building its own semiconductor ecosystem independent of Western technology. But the economic cost will be staggering, potentially trillions of dollars and years of painful transition where Chinese companies lose access to cutting-edge components. Their strategy involves building a fully autonomous and controllable semiconductor supply chain, from IC design to manufacturing and packaging, according to industry research. It's ambitious, expensive, and fraught with technical challenges. The United States maintains its leadership in advanced technologies, but faces years of costly supply chain restructuring. American companies will preserve technological advantages but lose access to the world's largest consumer market. The fragmentation of the global semiconductor ecosystem will inevitably slow innovation and increase costs for everyone. The economic costs of technological decoupling are expected to be substantial for both the US and China, notes industry analysis. This isn't a zero-sum game where one side's loss automatically becomes the other's gain. Both powers will emerge from this confrontation with significant scars. What we're witnessing is not just a momentary market disruption, but the beginning of a fundamental reshaping of the global technological order. The US-China tech rivalry is creating a fractured landscape where nations and companies must choose sides in an increasingly bipolar tech world. This technological decoupling is transforming how we think about national security, with tech sovereignty becoming as crucial as military might. For Canadians watching these seismic shifts, the implications extend far beyond your investment portfolios. The next chapter in global power is being written through semiconductors and artificial intelligence, not just aircraft carriers and missile systems. The winners will be those who navigate this new reality with strategic foresight and adaptability. This isn't just a tech rivalry. It's the beginning of a global realignment, and the battle lines are being drawn in silicon, not steel. The fallout from this semiconductor standoff will reshape economies, redefine alliances, and determine who controls the future of innovation. And no country, no investor, and no citizen is untouched. If you found value in this breakdown, drop a like, hit subscribe, and turn on notifications. Until then, stay informed, stay prepared, and stay ahead. See you in the next one.